Hello guys, welcome back to another weekly review. Uh, this week, like I told you before, was probably gonna be a pretty flat week. Turned out to be a red week for me. Wasn't really too much going on. VIX is dropping. I'm kind of sitting, waiting, trying to see what the market's gonna do. Last week, George D posted a comment asking to see or having me talk about my biggest losses and kind of lessons that I've learned from those. So a lot of this video is gonna actually be directed at answering that, and I think that's a cool thing that a small YouTube channel can do is I can make a video and respond to someone's comment because why not? Your voices are heard here. So going over the progress report here, my account's up, but that's because I had a $2,000 credit for like I made a deposit, so it's up for the week, but it was actually a red week in terms of return. This week's trades, I didn't really do a whole lot here, and I'll run through these pretty quickly. The first three here are poor man cover calls. I already owned the leaps for these positions and sold the shorts against them. And I think it was the right move because the rest of the week, all three of these stocks I think went down, so the calls are worth more and it offsets the losses on the leaps a little bit. I did sell a 212 BABA put. The plan for this one is to take assignment if it does go in the money and then just run the wheel against it if I do have to take assignment of it. So that's the current plan for this BABA position. We'll see if it stays that way. CCL, it looked like it was beaten up on Monday, so I decided to buy Elite. My plan is if CCL gets beaten up more and this position goes down to minus 30%, I'll pick up a second contract and then just let these guys sit. I also opened up the SoFi put that I used as an example in my video. I opened up 20 contracts worth, and I received a 40-cent credit for those. And then when I was putting on the profit taker order, I got mixed up on myself, and instead of setting a sell order at a negative 30 credit for the gain, I got mixed up and set it for a negative 50 credit, thinking that was a profit point for me. Turns out I had that mixed up. So obviously that instantly got filled and quick loss. You're welcome, market makers. So that was a oopsie daisy, $186. Make sure that the orders you're putting in make sense, I guess. Uh Newsy, my dividend from last week dripped and bought 2 shares, so that's automatic. On Tuesday, I did reopen up that SoFi bull put spread. I was able to open up for 52 cents credit this time instead of 40, so that was pretty nice. And the following day, I was able to close it for a profit when SoFi went up, so got a little nice gain back. I guess it kind of erases my oopsie from the day before, or 2 days ago. So that's nice. I guess the bull put spread ended up working in the end. It would have been better if I didn't mess up on the profit taker the first time around, though. Or at least the second time, I got a pretty good entry point, so that was pretty nice. Like I said before, I got my $2,000 credit for making a deposit. And on Thursday, I decided to close my Wish covered calls on my 500 shares, thinking Wish might go up, so I'll leave it uncovered for a bit. Nice little realized gain there. And so for this week, I realized $259, pretty low compared to recent weeks, but I'm not too worried about that at this time. Current positions, I don't think there's really too much to go into. Remember, this Wish 7.5 call was a covered call I did where I sold the call that was deep in the money. So as long as Wish stays above 7.5, my net profit for this trade should be about $400 because I'll sell the shares at 750 and net the difference. That was all time value in that contract. Baba, well, I guess Baba went down today. I actually haven't really looked at the market today. Took the today off, so that's news to me. Maybe I have to look at that on Monday, or actually Tuesday. I think the market's closed Monday. Uh, Short call on PMCCs, those are fine. Campbell, it's where you expect it to be. Short call on the KMB leap is down a little bit, which on the flip side means that the leap is up. That's why I like having these short calls with the leaps. They kind of just balance each other out and make it so one move doesn't make your portfolio move drastically. Just kind of like they offset and stabilize your port a little bit. Rocket, looks like Rocket went down significantly today. So I missed my exit for a profit window. Guess I'll just hold on to these for a bit longer. I mean, we got 2 years for Rocket to get back up to 22. So not too worried about that position. ITPs, that's the colony thing I don't really care about right now. The Zoom call spread. Zoom's obviously moved up significantly since I put this on. At one point, this was down like $400. It's starting to come back a little bit. I think Zoom's sitting at what 388 right now. It's finding like a sticking point at that level, so let's hope it sticks there for a little bit longer. All right, so now I'm gonna talk about some of my like biggest losers that I had during my time trading, and I'll tell you, had a couple of doozies. And first off, Tesla. This is probably why I'm very hesitant to trade on Tesla. This might have been like the second most stressful trade that I had ever done, and that's because my short put side got breached, and my bought put that I had to like limit the losses wasn't really keeping pace with how fast this guy was losing, and I ended up buying this guy back for a loss. I'm sitting there with a $3,800 loss, and I let the put here run a little longer. Luckily, Tesla continued going down, so this made back a little bit more of the money, and I was going to come out with like a minor scratches. I think this comes out to a net loss overall. Even if it doesn't, like this, the amount of stress this position caused me, no thank you. And then another trade I did at the same time was on Nikola. And, like, it's just a trade that I'm not really sure why I got into. I think I got enticed by the premium. Like, I don't even know what this company is or what they do. Like, from this one, I learned, just stick with companies you know. I didn't have the confidence to hold this guy during any kind of dip, so I maybe paper handed this a little too much. So just know the stocks that you're trading in if you're gonna be making plays on them. Another trade was I learned to not parrot trade Dave on Intel. I sold a bunch of put contracts on Intel at the 46 strike, and earnings came and Intel went down. I got breached and just kind of sitting there with a loss. And I kind of, learned, the joke is don't parrot trade Dave on Intel. And so I have a list of rules, kind of like the Zombieland thing, and rule 18 when it comes to Intel, just inverse Dave if you're gonna play. So, so when he got out of the position, and that's when I decided, you know what, I'll roll this sucker, and I ended up coming out with a profit. But still, it was just kind of a fun little trade. Buying premium. I'm mostly a premium seller, and as I was doing my review, looking at all my trades that went south, I realized that basically any time I bought premium that wasn't a leap, I lost money. But this is a trade that Randy and I both put on. There's a little, gamble here, just having a little fun. We knew it was like a risky play, but we thought it could be profitable. And once I put this trade on, within a day, we're up 200%. The following day, we're up 300% on this position. And just didn't have an exit point plan for this. So here I am sitting at the contract that was up 300%. You know what? Let's get greedy and let's wait for 400%. We didn't, or at least I didn't. I think he got out with a profit. I didn't have an exit plan for this position, and I'm not used to buying premium at this point either. So I am just holding it until I ended up just giving money back. So what was a 3% gain became a pretty big loss here. I had to keep a little bit of the premium by getting out. But I mean, rule number 12, just know your exit point. PLTR. Just want to go over this position real quick. So this was one, the stock was trading at 19.16, and I sold some calls at the 24 strike, which if you think about this, was at 25% the stock had to move 25% against me in order to get a breach, and sure enough, it did. So that loss would have been about $2,000. But I don't sell naked calls, so luckily this is part of a PMCC, and the leaves that I bought outpaced the losses here because it's a higher delta. It's actually made money on this trade. But had I not done a PMCC, like that would have been a huge loss on this position. And just for me, I don't sell naked calls anymore. I've done a couple, and knowing what I know now, I know how risky those are. So I just don't sell naked calls. Here's just more examples of me buying premium where I just lost more money. So Tesla, I'm not sure what I was thinking here. Maybe something in the chart told me that it's going to go down significantly today. And basically, I bought 0 DTE contract puts on Tesla. And since I have 2 going here, I think at one point I decided to like double down but bought a different strike price here. And obviously the Tesla did not move in my direction, or IV slash theta was chewing it too fast, and I ended up getting out, saving some of this capital that I had going here. I'll be honest, I'm not really sure what I was thinking there, but I don't normally trade 0 DTE contracts, nor do I buy premium. Here, GameStop, again, thought I was being smarter than the market. GameStop was shooting up at this time, and so I bought some 115 puts, and it just turned out that like IV kept contracting anytime that the stock moved down in my direction more than the value I gained from it moving toward my position. It just seemed like a contract that could not win in. Yet here I bought 3 of these contracts, and yeah, obviously I didn't win on buying premium here. All right, so this is Beyond Meat. This is the contract that I'd say this is my most stressful trade I was ever part of, and I mean I paid to learn these lessons from this contract, and here you get to benefit from that lesson that I paid for. So, Beyond Meat was trading at 161. Earnings was coming up, and the premiums were very juicy, and Beyond Meat hadn't been below 135, I think it was, for a while. So I thought 128 strike was really safe. Even if earnings was bad, it's not going to tank past this point. And I'll hold Beyond Meat, which in hindsight, I don't really want to hold Beyond Meat. So I lied to myself to get into that position as well. And, this is such a huge return, $161 for 4 days. I chose to sell 6 contracts, which, again, another lesson I learned is like position sizing, like 6 contracts can it's kind of risky if stuff moves against you. Just going small, you can always expand later if you want to. So here I did like 2 big things that I no longer try to do. And one is selling a contract before earnings and trying to win from IV crush. The other one is like position sizing. I'm always trying to think about my position sizing. So this trade, just to put salt in the wound, the day I put this on, Cloud Ninja actually messaged me, hey, the position, because he also did this one, was up like 40%. I closed that out. You should too. And I wasn't able to get to a computer to trade it out, or just, to close it out. I ended up being stuck in this contract when the earnings came out. And when I got home, I checked the stock, the price of Beyond Meat is at 107. I mean, some simple math, and I knew I was looking at a $12,600 loss. Woo! To me, that was a lot of money. For comparison, at this point, this wipes out my first 6 months of premium that I collected from all my option trades if there was a $12,000 loss. So that's the way I saw it. It's like, wow, I just lost a half year's worth of work. And, still profitable overall, but, like, to me, that was huge. Like, that's 6 months of profits gone because I thought I was smarter than the market, could hold through earnings, and, I overbet. Like, I did 6 contracts. Now, luckily, when market was opening, Beyond Meat recovered a little bit. I think it got up to like 118 or so when I closed the position. took a small loss. My initial instinct was to roll it out in time, so I actually sold. I think I did 9 contracts, like a month out, and shortly after that, I decided, you know what, that's too much money to have in one position. Ended up just closing that down. I think I got like 1,500 back from that trade, but I didn't want to have everything in Beyond Meat because, well, I really didn't want to own Beyond Meat at those prices. And this contract also taught me like it's okay to take a loss. By closing that roll position, I was able to spread my bets out on other stuff, and this was here, so November, and this month still turned out to be my best month trading options, even though I took my biggest loss ever. So, 3 lessons learned from this. Think about position sizing. Don't trade through earnings, and it's okay to take a loss and just move on to something new. Another thing to think about is, stay away from things that you consistently lose in. So, like the ARCs, seems like every time I play the ARCs, I was losing. ETFs are supposed to be safe because they move less. Well, I just can't play ETFs, I guess. The only ones I can play right now are TQQQ. That's the only one that I play. Otherwise, I stick with individual stocks. And down here, trying to show the Zoom play. This is an example when I did a ratio roll. I was losing on the Zoom put here because I was aggressive. I sold the 310 when Zoom was at 335. Zoom got down to like 305 or so, I think. And I chose to roll it out and increase my contracts to a safer strike because I thought 260 was pretty safe. And shortly after I rolled it, I was able to close it to, cancel out that. So that's just an example of know how to manage trades, and you have all kinds of options available to you to turn losers into winners. And well, here's Rule 41. Screw ETFs, especially the ARCs. Margin expansion is a pain. So towards the end of February and beginning of March, IV was expanding and I had a lot of stuff on. And this was the first time I really had to pay attention to margin expansion. I think I was sitting at 40% margin ratio used and saw it quickly jump up to 60%, 70, 80. And it was kind of interesting how my thought process had to change into it doesn't matter if this trade is good or not. It's also about how much margin this is eating up. And obviously first thing I did was close some of the bigger ones that I thought were more risky. So ARCG, BABA, close those down for small losses. I paid $26 to free up a bunch of margin here. Same thing with Clorox. It was heading against me, and I think this was actually already in the money. Decided to cut my losses, free up that margin again. I also took off, positions that I thought was going to be profitable. Again, to free up margin because expansion was happening pretty quickly. The Interactive Brokers was increasing the requirement for every play I had on. And at the same time, because my stuff is worth less, my net lick was going down. So it's a race between those two things to meet in the middle and get to that margin call. It's insane how fast your ratio can increase. Anyway, back to this. I also had to close positions that I thought were going to be super safe. This Netflix play, I had no doubt in my mind that this was going to be a profitable trade, which was eating up so much margin that, again, I closed it down just to get myself back down to that 50% level. Just be aware that margin expansion is a thing, and when you do experience it the first time, it's going to be scary. And just know how to manage that. You can roll stuff out further in time. You can close down risky positions. And again, you don't want to set yourself up to be have your account blown up, because if that happens, well, congratulations, now you're on the sidelines and you're not making money. So even though I was counting on Netflix here, in the off chance that Netflix decided to dip with everything else and blow past me, I didn't want to have $49,000 being tied up in Netflix at that time. So just something to be aware about is margin expansion. If you haven't experienced yet, maybe go on the Thinkorswim platform and jump to like this time period, put a bunch of stuff on using the on-demand feature, and then fast forward it in time like a day and watch that margin requirement go up and try managing it for yourself because like you see it does go up pretty quickly. And guys, well, happy 4th of July weekend. I mean, go out there, spend time with your friends and family, stay safe, and see you guys next. I am not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It is not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice.